Hey guys, it's Ian Reeves here. I'm going to do a quick little video and explain why real estate can be such a powerful investment. I'm just going to go through some numbers here that are using pretty round numbers, but these are definitely things that would be achievable. Definitely here in Kansas City, depends on where you live, but if you take your area and it's more expensive, you might be able to move these numbers up or down, but the basic concept's still the same. So I'm going to walk you through, this would be a $50,000 rental house. I can buy these here all day long in Kansas City, renting for $850 a month. So on something like that, you have to put away money for your property manager. Obviously you've got your loan payment, vacancy, maintenance, repairs, all those sort of things. I'll go through all the math on how to actually calculate that in another video. But I'm going to tell you from experience that $200 a month net cash flow after all expenses is a pretty reasonable number. So when you take that $200 a month, that comes out to about $2,400 a year. The other thing you got to think about is if you're buying a rental property, hardly anybody's going to go out and pay cash for that property. What I would typically do is put a 20% down investment loan, which means I have 80% leverage, or 80% other people's money basically funding the purchase of that property. And my tenant is actually, by virtue of the mortgage, they're actually paying that loan down every month. So on average, on a 20-year amortization, so you take that loan amount divided by 20, it's going to be about $2,000 per year. So it's going to be a little less in the beginning, a little bit more at the end, but on average it's about $2,000 a year. The other thing is property values basically keep up with inflation. We call it appreciation, but really it's just the value, relative value of that property is going to keep up with buying power. So $1,500 a year appreciation, that's based on 3%, which is more or less what inflation typically is. So you take $50,000 times 0.03, that's how you get that $1,500. And then the other thing is, if you're a good investor, you are never ever going to pay full price for a property. So I might be able to go and sell this house for $50,000 on the open market, but I'm going to make sure that I get a good deal. So I'm going to say that I'm buying this at $45,000. So I have a $5,000 equity gain there right off the bat. And I would say that 10% is actually pretty conservative. If you're a good investor, it's not that hard to get more than that. So when you add up all these numbers, you have $10,900, and that is basically your total gain for that first year. So if you take $10,900, I'm saying you buy this property at a 10% discount for $45,000. That's going to be a 24% return on investment. So I don't know about you, but my 401k was making between 6 or 8, so that 24%, that's definitely crushing my 401k. The thing you got to think about though is, this is if you paid $45,000 cash for the property, which you did. You put a 20% down loan against it. So your actual cash out of your pocket invested here is $9,000. And your return in that first year is $10,900. So what that means is in that first year, you've made 121% return on investment, which is most people probably think that that's not even possible, and real estate it definitely is, and it's basically through the power of leverage. So in the next few years, obviously you're not going to get the benefit of this equity capture, but even when you add in the cash flow, the loan pay down, and the appreciation, you're still going to get significant returns, at least above 25%, 30, even more. So if you're a good investor, it's not hard to get 30% return on investment year after year. So the other thing they have to think about that I'm going to explain in another video is, when you get to the point where you know what you're doing in real estate, you can actually take this $9,000 and turn it to zero. And the way that you turn it to zero is actually by using other people's money. So what we're actually able to do is we can basically buy a property, and we'll buy a distressed property, we'll fix it up, and then we will refinance. And because of the amount of equity that we've actually created in that property, we're basically doing a flip, but we're not actually selling it, we're just refinancing it, we can actually get all of our money back out. So we literally have $0 invested into the deal. We have a house that has 20% equity and we're cash flowing every month. So you take a number and divide by 0, you guys know what happens. So your actual return on investment is technically infinity. So there's a lot of things that you can do with real estate, basically through the power of leverage, that you can't do with other investments. And I would argue that real estate, when you know what you're doing, it's one of the safest investments out there, because it's, you know, it's actual real property that has value. And when you're investing in cash flow positive property, you're pretty safe. So basically the way that you're going to keep yourself safe is by educating yourself. So when you know what you're doing, I definitely think real estate is one of the safest investments out there. And you know, it can make a huge difference for the financial future of yourself and your family. So that's it for today. Thanks.